Increased chatter in the market amongst economists, various analysts that signs of, or at least the conditions are such that capex can pick up, or things could look better on the capex front after really a long time. You tend to see these data quite often. You yourself release the data and of course talk about it. What is the sense that you get? You think a pickup is around the corner?
Well, there certainly is talk around about a pickup. There are some numbers that do indicate that there is a pickup as well. The most important of them being RBI's OBICUS, the survey that told us that the capacity utilization has gone up to about 74% after languishing around 70–72% for a long time. Order book positions also seem to be improving. The numbers for August for order books do look good. So the index of industrial production is doing well. The GDP numbers show that the investment ratio is picking up slowly. So there are a number of indicators that seem to suggest that there is an improvement in the investment scenario. But I think there's a need for us to be a little cautious on this, because such indicators have come often in the past and not been able to sustain themselves. So one doesn't have to be a spoil sport on this, but it's important to be realistic also, as to wait for a little longer before we can say that there is a real improvement in the investment scenario.
Right, I was coming to that. There are definitely some concerns surrounding the economy. To start with, the August PMI manufacturing was down about 5.2%. Then there was also the fact that rupee is depreciating. With each passing day, it's hitting a record low. So could it impact some projects and some investments as well? Can we expect a slowdown because of that, albeit a slight one?
So the rupee's depreciation could have a small impact, but I don't think it's a significant impact. The problem is, in weak moments, a situation like a depreciating rupee can have a bigger impact. So we're just in the throes of just the beginning of some kind of an improvement. And if the oil prices go up, if the rupee depreciates, if anything else happens, which in normal times would not be a big deal, in today's times, it could be a spoil sport. So I think we need to be a little extra cautious on those usual things. So we're not seeing much increase in our capex numbers, for example. So people are still not aggressively putting up new plants. So it's going to be some time before we start saying aggressively that investments is picking up. But I can't deny the fact that there are some signs of some improvement. We need to wait for a little longer for these to actually consolidate and become a good trend.
Right. Mr. Vyas, when we talk about fresh improvement or fresh capex coming in, how important is the whole NPA issue that is going on, or the NCLT issue? You think a lot of corporates, instead of investing, will buy out assets from here on? So indirect capex would probably happen?
So in some sectors that is the case. For example, in steel, it's very likely that some good steel capacities that are on the block will get picked up by companies who could have otherwise set up new plants. So the solution to that actually is a demand pickup. So if there is a good pickup in demand, these companies will get taken over and new ones will also get created. Right now in some sectors, and I think particularly in the metal sector, there will be an M&A activity rather than a new capacity creation. There's a need for capacity creation in other sectors, not just those like the big steel companies or power companies which are stressed out. I think we need to see at least capacities being created in those other sectors which are not in the stressed assets list. So it's a combination. You are right. The way the stressed asset story plays out will have an impact to some extent on the new capex coming out, but there are other sectors which need to pick up as well. And after we have taken over, or the new companies have found new owners, there is a case for new capacities to get created. When the investment cycle picks up, all these things get absorbed. Right now the cycle is weak, and therefore this NCLT becomes an issue as a stopper for investment, so to say.
Right. What is the sense just on consumption that you're getting? you think that consumption is also finally seeing signs of pickup, and if that sustains, which means that corporates will have to build in more capacity?
That is true. That is the most important element in our economic rebound. That consumption has to pick up aggressively. So what happens is that there are sectors where we see good amount of consumption pickup. For typically, you will see two-wheelers doing very well, oftentimes passenger cars doing very well, and there are some consumer durables that also turn out to do quite well. But this is not broad-based enough, and we get misled by just looking at some two-wheeler sales, some tractor sales, and a few other sales and say, look, consumption is increasing. In reality, the Indian market is broken up into a pyramidal structure which is quite strong in giving out signals a little too early. So you have the richer, the slightly better off farmers or the rural folks buying tractors more aggressively, and that shows up in the numbers. But I think our consumption growth cycle is actually much slower than that. So we require a lot more broad-based, larger growth in consumption in rural India and urban India, which at the moment is actually far behind the curve, and note I'm saying far behind the curve. Employment is not growing, wages are growing too weakly, so this is not broad-based enough, and we require aggressive increase in agriculture for that, and we require aggressive increase in agricultural incomes. So that is missing in the last couple of years. Agricultural incomes have actually not grown. On a per capita basis, they have sometimes even shrunk. So the story is a little more complex. There's a market that is growing very well, showing up in two-wheelers and tractors, but the rest is not doing too well.